Lena Petrova of World Affairs in Context recently said something important.
But here's where things get uncomfortable and you need to pay attention here. Gold is not exactly a get-rich asset. I know that's how it's been presented, but it's not.
She's right, and the reason she's right might surprise you. It's because the value of gold never really changes. Its price changes, but that's just a comparison being made between gold's stability and a currency's volatility. So trading gold as a commodity is really just glorified gambling. It's a bet on whether gold will be allowed to inversely reflect the depreciation of the dollar, or whether short trades will manipulate and dampen its price. Trading gold on the COMEX does nothing to produce new or useful things. It's just casino behavior. The only reason the real value of gold would change is if we found a significant amount of new gold, or some of the old gold were to be somehow physically and irretrievably destroyed. Both scenarios are incredibly unlikely, which is why gold's value is stable. It's because the value of gold never changes that we can track the depreciating value of the dollar, maybe not intraday, but slowly and reliably over the course of months and years. Remember, stability is what economists tell us is important in an economy. Stability is the reason given for the creation of the Federal Reserve. And yet the Fed is the reason our economy remains super unstable, because the Fed, along with the U.S. Treasury, through a complicated mechanism involving debt instruments, must debase the dollar over time to feed the ever-hungry system of debt. Normally, gold would show us the level of dollar debasement in real time, but that's where Wall Street and the trading of gold as paper comes in. Paper markets are the insidious feature of our economy that impoverish most of us. Paper dollars that have no intrinsic value but a highly volatile fluctuation in price are either being injected into the economy hastily or burned out of it just as quickly. That's bad enough, but metals, real things that hold stable intrinsic value, can be manipulated too by converting these metals into paper. It's turning something real into a magical fiction, something that can be printed or burned on a whim. Once it's represented by paper, the system can then start a casino table where the non-productive parasites of our world bet on the future price of paper gold and paper silver, which unfortunately influences the price of real, physical gold and silver. Here's how ChatGPT condenses this reality into something bite-sized. Paper, silver, and gold futures allow huge volumes of metal to be traded without physical delivery, creating artificial supply that can overwhelm real physical demand. When large players sell these contracts aggressively, they can push prices down, even if actual bullion is scarce. Because futures prices set the global benchmark, physical metal ends up priced off this paper market rather than true supply and demand on real bars and coins. I believe in my gut that there should be no speculation on future price, that our economy should not be driven by the gambling taking place in the Wall Street casino. Obviously, this view differs from many mainstream economists, especially those you hear on TV, the ones employed by government media who studied Keynesian theory in college and read The Economist on weekends. I don't like to give these economists my attention, but ChatGPT has summarized their position. Mainstream economists argue that futures markets are necessary to provide price discovery and allow producers and consumers to hedge risk, stabilizing prices and planning. Again, an appeal to stability. And yet, how stable is their stock market? How stable has our banking system been over the last century? How stable have prices and inflation been? Futures markets fail in their attempt to do what capital, saved resources, was meant to do: drive price discovery and resource allocation. Real capital, not fictional futures contracts, should be the economic driver here, but it's not. The U.S. economy is not a capitalist economy and never has been. The only capitalist environments on the earth are much smaller scale agreements made between real people, individuals who produce, save, and trade their surplus. If you'd like to learn more about that, please visit my website. I've created a free PDF on something that might surprise you: an explanation of the Nordic rune of Fehu and its ancient lesson on how to use wealth to starve greed.